I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at inthemoneystocks.com. Thank you so much for joining me online today once again. It's always great to see you.
Oh, it's always great to see you as well. Thank you for having me and happy holidays.
Yes, happy holidays. We are speaking right before Christmas, so thank you so much for taking the time to do this interview. I know our audience always loves to hear from you. And where I want to start is with one of our favorite topics, which is gold. So, looking back at 2022, when we were speaking about a year ago, we talked about upside and downside for gold in 2022. And I think the upside point was around the 3,000 mark. The downside you gave us was around 1,600. So, since then, we've talked a lot about the strength of the US dollar and what that means for gold. So, would you say that's the main reason that gold ended up toward the low end of the spectrum this past 12 months?
Yeah, there's no doubt about it. You know, the dollar was so strong in 2022 that it basically took the wind out of the sails in gold. Now, I still think gold, again, if you compare it to the S&P 500 or Bitcoin, it was an amazing performer. In fact, I think we'd all rather have just had our money in gold this year versus any of those other assets. So I think that's the positive of it. I do think now that the Fed is kind of beginning to waver a little on these 75 basis point hikes and likely going, they did 50, they'll probably do 25 and then maybe pause. That's going to continue to keep the dollar under pressure, which means gold in 2023 should be a great performer.
Yeah, so it sounds like we will be needing to keep an eye on the US dollar in 2023. I wondered if you could help us take a look back at what it did in 2022 so that we can have kind of an idea of what's going to be coming.
Yeah, absolutely. So let's take a look at gold here on the daily chart. And again, what this shows us here is basically where gold started was right over here at around $1,775. It's up 25 bucks on the day trading at, or 25 bucks on the year trading at 1,800. So it actually, assuming it holds this into year end, it'll basically be flat to positive on the year. Now, what we've seen is what actually went on in the late 70s. So gold had the same sort of movement with this run up from 2018 to 2020, and then this sideways to lower chop for about 2 years. And if you go back again to 73 to 75, there was a big up move. Then 2 years from 75 to 77, you had this sideways chop. And then basically starting in 78, there was a massive move up in gold. And I'm expecting that to happen. In fact, if we look at some parallels here, what we can see is that gold, for the most part, has been holding inside of this little range here. And I can bring that out. And that's what we call a bullish consolidation. So you have an up move and then essentially digestion of that up move. And what we're looking for is a breakout above basically 2000, 2075, and you should be off to the races. So I think as a technician, this year is almost what the doctor ordered. I mean, it's not the best. As an investor, I would have loved to have seen gold up 20%, but this is really following the track of the past period where inflation was an issue in terms of what it did. And that tells us that there's likely significant upside coming up in the next year or two.
Right. And if we look a little more closely at gold, can you give us a sense again of upside and downside levels for 2023?
Yeah, absolutely. So here we have, downside levels very, very clear now, right? We have basically this low here connected to this low. So right now you're looking at your downside of around 1,600, give or take. That's what we talked about, obviously, in the past as being the downside, and that did turn out to be the low pivot. On the upside, really all you have now, and again, there's going to be minor levels of resistance, but this trend line area right up here, you could even draw a trend line that just connects the double tops right here. I would say somewhere between 2050 and 2070, that's going to be your big resistance area. If gold can push through that, it's got clear sailing for a big short squeeze. I think it's one of the most underinvested assets out there. I mean, if you go back to the Bitcoin craze, the crypto craze, I still remember being told that gold was done. It was over. No one wanted it anymore. And that tells me that there's not a lot of money in there. So at some point, investors will flood back, and that's where you get that parabolic move that could easily take us in 2023 to $2,300, $2,500 an ounce, maybe even higher.
Yeah, so I know a lot of people would definitely like to see that. I want to go back though to one of the things that you started touching on at the beginning of the conversation, which is the Fed's actions in 2023. You gave a little hint of what you think they might do next, but could you go into that a little bit more so we know what could be coming there?
Yeah, so I think investors have to recognize that, the labor market has stayed strong at this point, but I do think that there's a cliff dive coming in that sense. So I do think the Fed will hike at least one more time, probably in early 2023. If we look at the symmetry of their moves, they did a 25 basis point hike, then a 50, then 475s, and they've done a 50. So they're almost coming down the mountainside where it leaves them at least 25 more basis points. I think that one of the reasons why the labor market has stayed so strong is that businesses, and generally small businesses, have been very reluctant to lay people off because it was so hard to find employees, right? So when you struggle to find employees, which is what happened over the last year or two, you're very, hesitant to say, okay, well, the business is slowing right now, so I'm just going to lay everyone off. You say, well, what if it picks up? How am I going to find a good quality employee again? And so I think that's what you're dealing with right now, which is why the labor market has stayed so tough. But I do think there will be a point where even small businesses, and we've seen this, we've seen Meta lay off a ton. We've seen Google announce layoffs. I mean, the big companies that understand business cycles, they are laying off. It's just waiting to come to the small business side. And I think in 2023, we're going to see that. And the Fed will basically stop hiking rates after one or two more hikes. Now, the key here is this, is that the Fed, because they were off sides and called inflation transitory and they got behind the curve, they're going to be unbelievably hesitant to lower rates. They're going to hang on and say, listen, we don't want to lower too early. We don't want to create more inflation. And so I think they're going to wait too long to stimulate. And we're going to have a very, very tough recession by the second half of 2023.
Okay, really interesting. And I did definitely want to check in with you on inflation. That's kind of been what the Fed has been fighting this whole year. We've reached the end of 2022. If you had to give them, a report card, a grade for the year on reducing inflation, what do you think you would do? Because as we've spoken about before, there are factors that influence inflation that are beyond the Fed's control.
Right. There's no doubt about it that the Russia invasion, the supply chain, I mean, different things like that created additional headaches for the Fed. But, if you're just looking at them bringing down inflation, yeah, I mean, you give them a good mark for that. But you also have to ask yourself, why was inflation such an issue? Could it be that they printed trillions of dollars and had interest rates at zero for so long a period? I would tend to agree. And I think that, it's easy to say, oh, they get a B plus or an A for getting it under control. But it's like, well, they are the ones that created the problem in general in the first place, right? So again, that's a tricky one. But this is the kicker on inflation, is that bringing inflation from 9% down to 5 or 4%, that's the easy work. That's like, if you have to run a mile, maybe the first half, 3/4 of the mile, we're all doing all right. It's the last little bit from 4% to 2% that I think is going to be unbelievably hard to get to. And that's going to make it very hard for the Fed to stimulate in the future.
Okay, and I think we should also take a look at what this means for the overall market. So you've told us before in previous conversations, you see a big drop in indexes like the S&P 500, and then this period where they trade sideways maybe for a really long time. So is that still what you see coming? And if we look, zoom in on 2023 instead of looking super long, what are you seeing?
Yeah, so I mean, really, I do see another very troublesome year for the markets. If we look at the charts here, this is the S&P 500, and the first thing I go to is this trend line here. If you connect this high to this high here, which is the last two, the highest pivot, the all-time high, and the secondary high, and just stretch that down, the market has had very much trouble getting through that line. And you can see that again in the near term, we're starting to break down again from that level. So to me, I look at this market and I say, okay, has the market fully factored in a recession? Has it fully factored in the fact that it's going to be a longer recession? If you think about it too, the economy has been in overgrowth mode for such a long time due to stimulus. It means that we almost need a long period of undergrowth to bring it back to the mean, right? That the average for the longer term growth. So I have it penciled in that probably in the first quarter of 2023, we're going to head down to about 3,400 on the S&P 500, which brings us to the pre-COVID high just before the big dip on COVID. And then I actually think that there's a longer trend line here that we can actually go back literally years And I think this will be my target for 2023, that I do think we visit this 3,000 level on the S&P. So that puts us down 20 to 25% from current levels. And I think, again, that's really where I would start to get interested, maybe potentially buying a little bit.
Right. And, you mentioned recession, right? And that's another interesting topic from 2022. We had, people wondering, are we in one? Are we heading toward one? What is going on there? Is it happening in the US? Is it happening globally? What are your thoughts? Can you put that into, sum it up for us?
Yeah, so I think you have to look at it like there's obviously a recession for some people. I think lower middle income with inflation. I mean, they're hurting. There's no doubt about it. Now that the stock market has come in, crypto's obviously collapsed. I think that creates more pressure on middle and upper income individuals that have investments as well. But again, GDP came in. It was just revised the other day for this quarter or the past quarter, and that was actually very, very strong. So I don't think per the norm, we're officially in a recession, but I do think we will get to that point in 2023. And I think it's going to be one of those scenarios where the Fed is kind of saying, oh, the labor market's still good. This is still good. This is still good. And I really think it's going to be very sudden where we fall off a cliff. If you look at delinquencies in loans, car loans, the housing has collapsed. Remember how many jobs houses fuel, building houses. You got plumbers, electricians, builders, roofers. All of these things are just grinding to a halt. And people had a lot of money saved during COVID. So they were saying, okay, well, I'm okay for now, but there will be a cutoff. There will be a cliff dive at some point in 2023.
Okay. And then, of course, I think the key thing that people are going to want to know is how can they approach that, right? And I think this is different for each person. And we've talked before about the differences between, investing and trading. So, what is your approach going to be, I guess, is one question. And then how can different types of investors approach the situation that we do see coming?
Yeah, so I think each person has to figure out what they're comfortable with. Like I've been a trader for 20 years. So for me in this market, I'm what I call a swing trader, which means when the markets flush sharply, I buy key technical levels and then I don't stick around too long. I might hold it for a day, a couple days, a couple weeks, but I'm looking to sell into the pop, as in bear markets, we ultimately will go lower. So I think that's one type of investing, but it's not for everyone. Needless to say, if you work a 9 to 5, it's very hard to follow the markets very closely. So I think if you're that type of investor, you start looking for safe assets, right? You kind of move your money into maybe a little bit of gold, a little bit of silver, where in the very least it'll be protected. And I think even gold could give us a return in 2023. And I even think there will be a point where some assets, maybe a very small percentage, can go into Bitcoin when it finally bottoms out. I do anticipate a bottom in 2023, finally, in that asset. Again, how much it goes up from there, we'll have to see. But I think that, again, each person has to kind of think about from themselves. But I definitely wouldn't be like buying every dip right now in Apple or any of these others. Understand that bear markets get uglier and we're just in probably the beginning stages of it.
Okay, so you mentioned a couple of things that I do want to touch on, but before we go there, just a little bit more on gold. So I know we've gotten a lot of questions from our viewers, people who are looking at the price of gold versus the gold stocks and seeing a bit of a disconnect there. So I wondered if you could tell me if you're seeing the same thing and why that might be happening.
Yeah, so there's no doubt that in 2022, gold stocks, gold miners, they really took a big hit. And again, I'll explain this really simply. And you can see that, again, if we go back to the start of 2022, it's actually not as bad because gold miners have had a big bounce. But you're still negative for the year versus gold being slightly positive. But if you think about it, this makes a lot of sense, right? Because gold was not going up in value in 2022. It was basically flat or slightly negative. However, the miners' costs were all skyrocketing. Their labor, they had to pay more for their labor. They had to buy equipment that was more expensive. Basically because of inflation, there was huge jumps in their costs of running their business. And so without gold going up in equal amounts, it makes sense that the miners would underperform. Now, we have seen a good bounce because what we're seeing right now is gold is starting to rally and inflation is coming down. So if that's the continued trend, let's say gold goes up 10 or 15 or 20% in 2023 and inflation continues to come down, then you'd actually expect the miners to have good pricing pressure or pricing power, and miners actually should outperform in 2023. So I think the key is that inflation number. Like, watch to see that inflation continues to come in, and then the miners should do really, really well.
Okay, I think that's a good succinct explanation for everybody. So you also mentioned silver, and I know we have, an audience who also enjoys silver. We didn't make it past that key $30 per ounce level this year that everybody is looking for. And I wanted to check in with you and see if, from a charts perspective, is $30 really the level that we should be watching for?
Yeah, so silver, there's no doubt that that 30-ish level is definitely one of the key levels. One of the charts I want to show you here, and let me show my screen again, is the chart on silver and the perfect channel that it's been in since that same run up from the COVID low right here in March of 2020. We had this big move up, and we basically went from $11 and change per ounce to a high of about $30. And then look at how you've just been stuck. Low end hitting here and here and here, and then your high end hitting multiple times here, here, and here. And so what this tells me is that silver has a little bit more short-term upside to about $25 and change. And then silver is going to actually run into resistance. Now, I actually personally think in 2023, you break out on silver, but just be aware that it's got to get through this 25, 30 level or so before that breakout can occur. Short term, we're a little bit extended just because it's been such an amazing run on silver. Silver's gone from, $17 and change to 20, almost 24. So it's due for some consolidation, but I think you actually look to buy that consolidation after a little while and look for that breakout in 2023. So again, I think that gold is the safer play, meaning that you might not get as big of a bang for your buck out of gold, but it's also not going to collapse as much. Silver, because it's an industrial metal as well, there's a little bit more volatility. So investors just need to understand the risks difference in each metal.
Okay, perfect. So we've gone over what's going on with gold and silver, precious metals. I want to ask you about other areas of the commodity space. Is there anywhere else that you are bullish on as we head into 2023?
I think in general metals, I think again, the more industrial the metal, the more you have to be careful. Like for instance, copper, I would remain relatively hesitant on copper. It's good to see China reopening, getting away from their COVID zero policy. But if we are going to continue to slide into a global recession, then copper may have trouble. Oil, I continue to think it's going to go lower. You'll have bounces, but a global recession means a ton of less barrels being bought on the open market. And even if OPEC wants to cut production or Russia has issues, it doesn't compensate for the lack of demand that can be generated or lack thereof in a recession. So for the most part, I definitely am. My favorites by far remain gold and silver. Those are kind of the clear-cut winners in my opinion. And then you have to just look at other metals that are precious metals. I mean, there's always something like rhodium, but it's super expensive. But obviously, that's a precious metal as well.
Of course, of course. Okay, so moving on from the metals, we do need to get an update on the crypto space from you. And actually, where I want to start is with FTX because we haven't had a chance to speak since that whole situation unfolded. So I know from the past that you're a believer in regulation in the crypto space. So, what do you think we get from here broadly? What can we say about what this means for the sector? Just some thoughts on that.
So I think the FTX scenario, first of all, horrendous for investors that are losing or have lost their money. But I do also think it was the kick in the pants, if you will, that the regulators in Washington needed to get something on the books. When you get that many people to get hurt, and also big money got hurt, which is kind of the first time I would say that institutional money really took it on the chin. And so I think that that's also going to push for regulation. And I think this is going to be the best. I know everyone was against it when crypto was rocking, but this is why you need regulation. You need rules. You need transparency. Otherwise, unfortunately, there's always bad apples that are going to do shady things and end up robbing people. So we get that regulation in the door. And then once you have transparency, big money can actually invest knowing it's somewhat safe, right? It's still the investment. It's still risky investment, but at least they're not going to get their money stolen. So I think that's the key there. It's really a crazy scenario, but I liken it to the Lehman Brothers collapse. The Lehman Brothers collapse in 2008, because again, very similar in Lehman wasn't doing shady, like illegal stuff, but they just over leveraged themselves quite a bit. And again, you have the same sort of kind of panic and sell in the crypto markets that you got back then. And so again, for me, I have it priced in that Bitcoin probably continues lower. Maybe as low as 9,000 is kind of my key target right now. But once it gets there, I think it's going to coincide with regulation coming out. And then I think you actually start to see a move back up in Bitcoin.
Yeah, I was going to ask you if you saw this as a setback for the sector, but you described it as a kick in the pants, so that sounds a little bit better. For you, just a little bit more on regulation. So, what would a good balance look like for you between, not too much, not too little? What does the middle ground
I mean,
look like?
things that I would want to see would be like FDIC insurance, where one of my big concerns in my accounts is if someone hacks in and they steal my funds, it's gone technically, and I don't have any recourse about it. Once it's gone, it's gone. And I think the government needs to protect investors in that way. I also think you have to have regular audits, like a lot of the same things that publicly traded companies have to go through. They have to show the books. They have to have it audited by a legitimate firm. There can be no hiding of assets or anything like that. What are they using? It all has to be revealed. Like if your customer funds are here, how much do they have to keep in reserves to protect the money that's on their books and stuff like, so all of these things would be really positive. I think we do run the risk of seeing the politicians over-regulate a little bit, but I think at the same time, that's a risk that you have to take in the crypto sector. Otherwise, the cryptos, like if you don't get investment, if you don't get regulation, crypto to me is almost like a dead asset, unfortunately. And so it's a big deal. You have to have it because otherwise big money's not coming in, and then you're not getting Bitcoin to 100,000. You're not getting it to 1 million and so forth. If you get transparency, I really do believe it can go there.
Okay, and so 9,000, that's the bottom level that you're currently seeing. Is that a 2023 story? Can you just clarify that?
Yeah, so you're exactly right. For me, it is a 2023 bottom. I've priced it out right now where it would be about May or June, and I'm doing that based off of the FTX debacle, matching it with Lehman Brothers. Lehman Brothers, the S&P fell for another 6 months and dropped about 45% from that event. And so if we have that same sort of shock to the system in crypto with FTX, and from that date, 6 months out puts us in May or June of 2023, and 45%-ish from approximately when it happened puts us just below 10,000, around that 9,000 marker. Now, there is always the possibility it could go even lower. The worst case would be like 3,500 on Bitcoin, and then it would match up with Amazon's collapse in the .com. Amazon dropped 95% in the .com collapse, and that would put it on par. But that would be like a worst case scenario where regulation doesn't come out. And for the most part, I think you will get regulation. And so it will draw in some bigger money at that point at 9,000.
Okay, and so as we're getting a little bit close to the end here, we've got to ask what you think the best performing asset will be in 2023. I remember from last year, it was gold versus the S&P and versus Bitcoin. And we did get that, although probably not at the heights that many people wanted to see. So 2023, what do you see going forward?
Yeah, 2023 for me, I'm going to pick gold again, and I don't like repeating myself, but if it's going to be the best performer, it's the best performer. I think that in 2023, gold will outperform. My guess is in 2024, Bitcoin will be the best performer. I think the stock market likely is going to be mired in a multi-year recession, so stocks will likely struggle for the next 2 or 3 years. I actually don't even see new all-time highs in the S&P and the NASDAQ probably for 10 to 15 years, which is kind of scary. But remember, you're coming out of this massive liquidity craze. And if you go to the .com collapse, it took the NASDAQ 15 years to make new all-time highs. So it's going to be a swing trader stock market, investors gold market, and then probably eventually a bottom picking Bitcoin market.
Okay, and so Gareth, you've been doing so many of these interviews over the last month, just giving out all of this great advice looking forward. I wondered if you had to wrap up with one point that you would leave investors with for the next year, what would it be?
I would say it's to get educated in terms of chart reading and understanding the market psychology. The reason I say that is bear markets really show us that we don't know what we think we know. We all think we're geniuses in the bull markets. Everything goes up. We make lots of money. And then tendency is to give it all back in the bear market. Well, learn how to read and find the signals when a top is occurring. And all of a sudden you increase your net worth over years exponentially. Imagine if you had Bitcoin at even 30,000, but you sold it at 65 or 67,000 because you saw the signals that were there in the chart that a top was there. So much money to be made, taken off the table, and then reinvested at the right times. And I think, again, it's a holiday season. Go find yourself some good education and splurge for yourself.
Okay, I think that's a great note to end on. Thank you so much for joining me to go over everything. And of course, we'll be checking in with you in the new year to see how things are going.
Awesome. Thank you so much. Have a great holiday.
You as well. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway with InTheMoneyStocks.com.